JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 12th of March 2021. So yeah, welcome everyone. Welcome to this Friday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that we looked at this morning just to see how everything's getting along. But yeah, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is the German index DAX, and yep, it opened lower today. It continues to trade in negative territory, however, without any kind of huge fluctuations, I would say. So it did open lower, but kind of remains near this this 14,475 territory that I mentioned to you guys this morning and yesterday as well. So the idea was that if we get a break below this area, below this 14,475 territory, and we get a daily close below that as well, then yes, we could go for maybe a larger correction to the downside. But for now, the index is still kind of balancing above it, although we could class all this here as a potential island reversal formation. As you know, that these patterns tend to be kind of, but reversal signals. However, as I said to you, I'm still keeping an eye on that 14,475 territory. I need that daily candle below, staying below that area in order to get a little bit more excited with let's say further declines, or let's say a larger correction to the downside. So keep your eyes on that one. For the upside, I'll take a very conservative approach and wait for a pop above the current all-time high near the 14,595 territory in order to get, let's say, comfortable with higher areas. Nasdaq 100. So yesterday we managed to break the downside line here, taken from the high of the 16th of February, and yeah, we managed to close above it. However, there is a bit of a problem here with the with this 21-day EMA, which continues to provide decent resistance. So yesterday, yes, the index pushed higher. At one point, it even broke above the 21-day EMA. However, it still closed the day below this 21-day EMA and near this 13,000 mark, 13,057 mark, which is the high of the 3rd of March. So basically, in a way, on one hand, we have some positivity here that shows that yes, the index can drift still to the upside because it's still trading above this downside line. But on the other hand, we are finding this strong resistance here with this level together with the 21-day EMA. So in a way, this is kind of in the way here. If we take a look at the cash index right now as well and see where the index is currently trading at, we'll see that the price is sitting around the 12,880 territory. So we did already have a decent decline here. So basically we're near this downside line. So we're just kind of testing this downside line. And another thing, this is something that again we can maybe apply from the German DAX. If we get a nice let's say opening gap here to the downside, and the index drifts today lower, then maybe we also could see here a possible island reversal. However, to be honest, I mean, as I mentioned before, still I would prefer to see a drop below the 12,593 territory right here. A drop below this area could strengthen the downside scenario, because we would be back below the downside line. We would be back below this 100-day EMA, and yep, more sellers could see this maybe as a good opportunity to step in. So let's keep an eye on that one. Jumping into S&P 500, also had a nice good push yesterday, so it made its way higher. Basically, with the S&P here. I talked about this index this morning, so just a quick update. If you want to go for some higher levels, just be a little bit more on the safe side and wait for a pop above yesterday's high near the this all-time high, which is roughly around the 3,960 zone. So a nice good pop above it could, open the door towards higher levels. The cash index is currently trading near the 3,926 territory. So basically, we're sitting somewhere around here near the high of the 24th of February, not far from there. And if we, let's say, continue to trade below this area, below the high of the 24th of February, then maybe we could see this index maybe correcting a little bit here to the downside towards this downside line to test it from above, or maybe even this upside support line taken from the low here of the 23rd of March, and then we will take it from there, guys. But again, for now we are at a very interesting spot here. The question here, can we make our way above the 3,960 zone? Well, if we can, this confirms a forthcoming higher high, and of course a new all-time high. But again, like I said, let's not rush into anything. Today's Friday, guys. Don't overtrade. Keep your eyes on this little hurdle here, this 3,928, the high of the 24th of February. And yeah, I mean, if we stay below it, then maybe we could go for a bit of a decline here. DXY, very quickly on this one, and pushing nicely to the upside. So of course the slight weakness in the equity world is helping DXY to make its way higher. As you know, DXY is currently seen as a bit of a safe haven currency. So yeah, I mean, we're traveling back above this 91.75 territory. Let's see if we can stay above it. But as I mentioned to you this morning, I would prefer to maybe now at this point I would prefer to wait for a push above the 92.50 zone in order to get a little bit more comfortable with higher levels. Jumping into gold. Gold is not really liking the stronger dollar. It is drifting lower, but to be honest, everything's in line with the idea that I've mentioned to you in the beginning of this week. The idea was that we could see a push higher, a bit of a retracement, a test of the 1740 zone, and then, yep, if that holds, another slide could be possible, potentially leading towards the this upside support line. Well, let me just show you what I'm talking about here. This upside support line taken from the low, the 20th of May 2019, and then yeah, we would take it from there. We'll see what it wants to do then. But for now, also the big focus here is on the 1704 territory, which is currently providing good support, and that's the low of the 15th of June of 2020. If we get a clear move below this again, then yes, like I said, I'll target this this upside line. Bitcoin Cash, quick update here. I talked about Bitcoin Cash this week as well, and the idea was that we need that daily candle to stay above the 553 territory. I've mentioned Bitcoin Cash yesterday as well, and this is exactly why I keep saying to you guys that wait for that daily candle, wait for it, because we kept getting these little overshoots here, but we couldn't get the daily candle to stay above this area. And yep, I mean, this is the result we're having right now. We can see that the crypto is pushing a little bit to the downside. However, this move lower could still be seen as a temporary correction, because we are trading above this upside support line taken from the low, the 23rd of December. So in a way, there is still a chance for the for the bulls to step in. But again, let's not rush into anything yet. I would prefer actually to get that daily candle staying above the 553 territory before aiming for some higher levels. Quick update on AUD and ZD, just to show you that the idea that I kept talking about this whole week is kind of working out. So we got our pop above the 1.0771, and yep, now we're aiming for this downside line taken from the high of the 19th of January, and then we will take it from there. If we clear that, yes, we could go for some higher levels, but then we would prefer to wait for at least a pop above this 1.0843 territory marked by the highest point of January of this year, or in other words, the highest point of this year, the current highest point of this year. Quick update on GBPCHF, failure to reach the highest point, the current highest point of March today, resulted in a decline again, and yep, now we're seeing this nice little correction, which is, to be honest, all nice and healthy. So now we'll see if this upside support line drawn from the low of the 12th of February can provide decent support. If it can, we might see a nice rebound and a push back up, but if it struggles to hold, then of course a break below this may lead to a test of the 21-day EMA here, shown as the yellow line first. But if the buyers are still nowhere to be found, then yes, a further decline towards this other upside support line drawn from the low of the 11th of December could be possible. EURGBP very quickly here. So this is exactly why I said to you guys this morning to keep an eye on the this 0.8540 territory right here, which is the lowest point of February. And as you can see, the pair didn't really reach that area, although yes, it continues to trade below this downside line, but right now it's testing this downside line. It did break it initially, but it's currently just sitting bang on that downside line. In order to go for some higher levels, slightly higher levels, I would prefer to get a daily candle pushing above the 0.8596 territory right here, and then yes, we could go for slightly higher levels. But at the moment, I mean, I'm just observing this this activity here on EURGBP. It could be quite interesting going into next week. EURUSD, so drifting to the downside and yep, falling below this 1.1952 territory and continuing to trade below it. So which means that, well, I mean, maybe we could see a bit of a further decline here if the rate today remains below this 1.1952 zone marked by the lowest point of February. And if we do see that, then yes, my next target is the 200-day EMA here, or the 1.18 territory. So let's see how this is going to play out. For now, I will say that I'm not going to really be very bearish or bullish. I will just be a little bit on the neutral side. And yeah, I mean, if we do see this pair staying today below this 1.1952, this increases the chances for it to move back towards this 200-day EMA. And we'll take it from there, of course. For the upside, I need to see this pair moving a bit above this 1.2023 zone. If we do see that daily candle staying above it, then this means that yes, we will be back above the above all of these EMAs here, and yep, it increases the chances for a move higher. But this move higher could be limited near this downside line taken from the high of the 6th of January. So keep your eyes on that one. So guys, I hope you found it useful. So thank you very much for watching and listening. I really appreciate your time, guys. So yeah, I hope you'll have a fantastic weekend. Stay safe, everyone, and don't overtrade today because it's Friday, and yeah, just save yourself for Monday. And yeah, like I said, let's keep it simple, and of course, like I said, guys, always protect yourself with a stop loss. So have a wonderful weekend, stay safe, and bye for now.